Hello and welcome to Pro Trader Strategies Market Commentary for Friday, October the 21st. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Not a whole lot of economic data coming out today, despite the fact that it is a Friday. Usually we do have some economic data. We did get stuff out of Canada in regards to retail sales. They had core retail sales come in unchanged, a little bit lower than expected of 0.4%, and retail sales came in at negative 0.1%, was expected to be a positive 0.5%. Then here in the United States, all we really have is a Fed governor speaking, Trulio. Then on to the market. So the overall markets are pretty quiet right now. We've got crude oil /CL up 4 cents on the day, still hanging tough in that $50 a barrel range, but right there pushing up against the value area high this morning and coming back off of that. We got gold coming off just a little bit by $2.70. It can't break above and stay above that 200-day moving average, which is really starting to act as resistance. We start seeing this continue to come down and cross. That is going to be a win for the bears, if you will, and will make it look like it is turning into a bear trend. So keep that in mind going forward. Then on to the bonds, /ZB, same situation coming. Those two lines approaching one another. I think it's called a golden cross when those two cross there. We'll have to see where that happens, but I foresee it kind of pushing sideways right here at this point of control where the most time and volume's been spent heading into that FOMC. I don't see a whole lot of big movement before that. I think that it's going to want to stay right here between the 38.2 and the 50 Fibonacci level, and which is right there in line with that most time and volume spent point of control. Under the Dow Jones Industrial Average, just off a little bit by 36 points on the day. We've got a bit of a mixed bag. Right before I went on here, NASDAQ was trying to go into positive territory while the Dow and the equities were in negative territory. NASDAQ slipped back just below negative territory and pushing up against this value area, high area. But the point of control is right there too. So again, just extending this range to be a little bit bigger than what it was the past couple of weeks. But at the end of the day, we are humdum, if you will, in the overall equities. Here's the E-mini S&Ps leading the way, if you will, to the downside, I guess, but down only 4 points on the day. And again, they keep testing that 50-day moving average and can't break above it. So it's just been really quite boring lately, despite the fact that we have seen a little bit of volatility in regards that this chart makes it look like there's been a big sell-off, but really it's been pretty mechanical, if you will, on the way down. And then right after the market opens, the buy and hold going into the weekend looks like that might be the case. We could see it go into positive territory there. On to a few things that I've done. I didn't end up doing the McDonald's or any of those other trades, GE. There just wasn't a lot of premium in those that you would expect for a earnings trade. The risk did not outweigh the reward. So the risk actually outweighed the reward, I should say. I actually tried to do the Microsoft, play it to the upside, and just never got filled on it. I didn't want to just chase it and didn't get filled on any of my earnings trades. So that is what it is. Sometimes we see earnings season come and go, and it was a pretty boring one so far for me. It's been very difficult to find good trade location for a lot of these earnings trades. So we'll have to keep our fingers crossed going forward. But one thing I am starting to see is we're not seeing a lot of volatility crush after some of these earnings. So I'm trying to take advantage of a little bit of that, like I did with ABT here, Abbott Labs. And I went into the November and sold the 38.42 strangle. It has a tendency after its earnings, for the most part, to kind of break down and consolidate a little bit. They beat earnings just by a penny, so I could easily see them want to trade right around within this area. If it doesn't, I'll just look to defend that by either rolling up the puts or rolling down the calls. But generally speaking, you kind of see these things turn into a big bell curve, and I'm hoping that's what we see right here, is to fill in some volume in here in the next month and create more of a bell curve there. So that's why I was looking at it that way for ABT, other than trying to stay active and keep something going. And YHOO also beat earnings and surprised me to the upside, despite the fact that on those earnings we kind of came off a little bit with YHOO. So I played it to the upside in here just to think that we were going to get a little bit of push higher, and did the November 38 puts and sold them for 39 cents just to get something going, add a little bit of long delta to it, to my overall portfolio. I'm negative delta, so I just figured I'd try and find something to add some positive deltas, get my overall portfolio a little bit more neutral. Then on to HES. These are a couple of things that I had on that weren't working out, wrote them out to the bitter end because they weren't working out. And in HES, I had on the October 50 or 62.5 call spread in there, and I originally paid $6.30 for it, sold it out for $2.54. I had a couple of opportunities in there maybe, but for the most part it was a loser from the point I put that on. Came back a little bit for me, but just not enough to get it back to break even, and that's why I rode that out to the bitter end. IBM and the EpiPen company, MYL, was one of the ones that didn't work out for me. I'm letting those expire worthless. So those are the trades that I did that didn't really work out. Both of those were played to the upside, and those markets came off. I tried to be a contrarian in MYL, and it didn't work out. So I thought that some of that EpiPen stuff would go by the wayside, but it didn't really. At the end of the day, everybody's going to need EpiPen, or these people are still going to need EpiPens, and are going to pay whatever they need to pay for it. So that's why I did that. Today's going to be on long strangle, so check that one out. It's going to be a really important one, especially for a lot of new traders that love this strategy. I'm going to give you guys a little bit more insight into that strategy, why I like it, why I don't like it, and the ways to trade it to increase your probabilities of success with that strategy if it's one of your favorites. All right, so go to protraderstrategies.com, sign up for that one. It should be very informative and shed a lot of light on that particular strategy. All right, if you can't take that, take it easy.